Hey guys, how are you all? My name is Harshit Dwivedi, and in this video, guys, I'm going to talk about this. What is this financial resolution and deposit insurance bill? So, friends, this is not a very new topic. The bill has already been, introduced into the Lok Sabha in August, in the month of August 2017. Now, basically, this bill is currently pending in the Lok Sabha, and it is under the consideration of the Joint Committee of Parliament. So basically, what this bill aims to do, we will try to understand in as much short as possible, and in the clear context. Because many people are very much apprehensive about this thing that if this bill comes into force, then obviously the guarantee of the money that we deposit in the banks will be gone. Something like these things are going on, so there needs a clarification is required in this thing. So basically, this financial resolution and deposit insurance bill, this bill aims to provide a comprehensive resolution framework, for financial sector entities, so that situations like bankruptcy situations in banks and insurance companies and other financial sector entities can be dealt accordingly. Now, basically, what this financial resolution and deposit insurance bill will do, it will repeal the Deposit Insurance and Credit Guarantee Corporation Act 1961. Okay, and the powers of the Deposit Insurance and Credit Guarantee Corporation will be transferred to a new organization named as Resolution Corporation. Okay, this will be done by this bill. Now, what is this Deposit Insurance and Credit Guarantee Corporation? Basically, Deposit Insurance and Credit Guarantee Corporation is a subsidiary of Reserve Bank of India. It was established in 1978, and it was established under the provisions of a Deposit Insurance and Credit Guarantee Corporation Act 1961. It is a statutory body, and it was established for the purpose of providing insurance of deposits and guaranteeing of credit facilities. Ensures of all bank deposits, whether they are saving, fixed, recurring, current, up to a limit of 1 lakh on each deposit in the bank. So what is this Deposit Insurance and Credit Guarantee Corporation is doing? That, suppose, friends, I have deposit up to rupees 1 lakh in a bank. Now, suppose the bank takes a wrong financial decision and the bank goes bankrupt. So obviously that bank is not having money. So where will my deposit go? My deposit will be insured by this Deposit Insurance and Credit Guarantee Corporation. Now, basically, through this bill, what is the name of this bill? Financial Resolution and Deposit Insurance Bill. Now, if this is passed through, what will happen? This Deposit Insurance and Credit Guarantee Corporation Act 1961 will be repealed. So obviously, this organization, Deposit Insurance and Credit Guarantee Corporation, will go away. And in place of it, this Resolution Corporation will come. Now, what does this Resolution Corporation does? Basically, this Resolution Corporation will provide to the consumers like us who are already covered, some amount of protection will be provided to the already covered consumers to a reasonable limit. Public funds will be protected. How public funds will be protected? For example, suppose if we deposit a money in a bank, and if a bank takes a wrong financial decision and goes bankrupt, so obviously bank has taken a wrong decision and has gone bankrupt. So what this Resolution Corporation will do? Resolution Corporation will protect the stability and resilience of the financial system by controlling or by regulating those banks so that they don't go bankrupt. So any financial decision which is wrong by the bank can be countered by the Resolution Corporation. And this is basically to maintain the overall stability and resilience of the financial system. Because what happens that when banks go bankrupt, what is the norm? The norm is that the taxpayer money, the public money, the government will pump in the public money and save the deposits of the people, of consumers like us, which are there in the banks. But whose fault is this? The fault is of the bank. Suppose bank gives a bad loan. Suppose bank gives a 10,000 crore loan to Vijay Mallya, which is now basically a defunct person. He doesn't have any money to return to the banks. So obviously this was a wrong decision on account of the bank. So on account of the bank, who is going to suffer? Consumers and depositors like us. And obviously the taxpayer money will be submitted to compensate for the wrongdoing of that bank. So this Resolution Corporation is going to oversee the whole system and will aim at protecting the stability and resilience of these banks and all other financial sector entities in our financial system. Now we are going to see the merits of these financial sector and deposit insurance bill. This is the basic merit which I have already told you, that it seeks to give the comfort of financial service providers, comfort to the consumers. We are the consumers of the financial services. So basically a comfort will be provided to us, a sort of surety will be provided to us. And obviously this financial regulation and deposit insurance bill, it also aims to inculcate discipline among financial service providers. Obviously, in the event of financial crisis, and this financial resolution and deposit insurance bill will also limit the use of public money to bail out distressed entities. For example, if an entity has got bankrupt, so not always the public money or taxpayer money will be pumped into, get it out of danger. Okay, so when these things will come, obviously that those banks or those financial services provider will act, more responsibly, because now they will know that they are not going to be bailed out by the government. Okay, obviously, what will happen? Suppose that if Resolution Corporation has said that this bank is doing a wrong practice, and the consumers know that this bank is doing a wrong practice, it is not a financially viable or business viable practice. So obviously what the depositors will do, they will take out their money from the bank. Okay, so by this thing, the banks and the financial sector provider will themselves becomes responsible, so that nothing wrong goes. Also, this bill will maintain financial stability in the economy by ensuring adequate preventive measures, and there will be necessary instrument put in place to deal with an event of crisis. Also, the bill, it will aim to strengthen and streamline the current framework of deposit insurance for the benefit of a large number of retail deposits. So if you are thinking, friends, that by the repeal of this Deposit Credit and Guarantee Act, our money will not have any guarantee, then that is wrong. Guarantee will be there. Retail depositors will always get guarantee, but in addition to that guarantee, there will also be a framework so that good business practices are being followed by the financial sector entities. And if the financial sector entities are going defunct, there is no surety to them that they will be bailed out by the public sector. This will make them more accountable and responsible in their functioning. Also, this bill will aim to decrease the time involved and the cost involved in resolving distressed financial entities. So basically, many steps have been taken by the government recently, to improve the overall economic environment sentiment in the country. One is the Insolvency and Bankruptcy Code. This one is also important, the Financial Resolution Deposit Insurance Bill. So I hope, friends, that this thing was a bit clear to you too. If you have any doubt in this thing, you can ask in the comment section. This thing is not very difficult. Still, it is pending in the Lok Sabha. When it will get passed in the Lok Sabha and Raj Sabha and finally become a bill, finally become an act, then I will, update about it to you again. So thank you for listening my video. Thank you for being patient. Have a nice day, friends.